Have you ever noticed how sometimes the markets seem to move in ways that just don't make sense? That's where the relative volume indicator comes into play. Let me tell you about a time when I used this tool, and it basically told me exactly what was going to happen next. Imagine you're trading a popular stock and suddenly the price starts skyrocketing. The market is chaos, but then I pulled up my chart and saw that the relative volume was through the roof way higher than average. That's when I knew it was time to hold on because something big was about to happen. That's how the relative volume indicator works. It compares today's volume to an average over a set period, usually 20 trading days, and tells you if the action is normal or not. So, why should you even care about volume in the first place? Well, volume is like the pulse of the market. When more people are buying, the price goes up, and when more are selling, it goes down. But with relative volume, it's not just about seeing a lot of trading, it's about how that volume stacks up against what's typical. Now, let me introduce you to our Trader Pro. This platform is built specifically for people like us who want to analyze the market in detail. One of its best features is how easy it makes it to use tools like the relative volume indicator. You can adjust settings like the look-back period and smoothing method to fit your trading style, whether you're a short-term trader or someone who likes to hold onto investments for a while. Okay, so let's dive into what relative volume is telling us. When I see that the relative volume reading is above 1, it means the volume today has been stronger than average. This can happen when a stock or futures contract is really heating up. People are rushing to buy. That's a good sign if you're already in a trade because it suggests the price might keep going up. But here's the thing. Sometimes when relative volume spikes above 1, it also means the price might break out of a trading range. I remember once when a stock was hovering around a certain level for weeks, and then, boom, it just blasted through that level. The volume was off the charts, and sure enough, the price kept climbing for days. So, if you see that relative volume is high and the price is breaking out, you might want to hold onto your position because it could be the start of something big. On the flip side, when relative volume drops below 1, it means the volume has been weaker than usual. This can happen during downtrends because fewer people are buying. It's like the market is losing steam, maybe the trend is about to reverse. I've seen this happen before where a stock had been going up for months, but then the volume started dropping off and suddenly it started falling. That dip in relative volume was a big red flag that the uptrend might be coming to an end. Now here's something really cool. When price action and relative volume don't match up, it can give you some powerful signals. For example, if the price is making new highs but the relative volume is actually dropping, it might mean that the buyers are getting tired, maybe it's time for a correction. On the other hand, if the price is dipping lower but the relative volume is going up, it could mean that buyers are stepping in at a discount, signaling a potential bottom. So, how do you actually use this tool in our Trader Pro? Let's walk through it step by step. First, you'll need to open your chart and look for the relative volume indicator. It's usually somewhere near other volume indicators like the volume pillar or bar. Once you've added it, you can start customizing it to fit your needs. If the default look-back period is 20 trading days, you might want to adjust that depending on how long you think it should be. Maybe 30 days if you're looking for a longer-term trend, or 10 days if you're more interested in short-term movements. Our Trader Pro makes it easy to change these settings without much hassle. As for smoothing methods, there are options like the simple moving average or the exponential moving average. The idea is that some traders prefer a smoother line, while others want something more responsive. Try different settings and see what works best for you. I've found that the simple moving average gives me a good balance between responsiveness and stability. Once you've got the relative volume indicator on your chart, it's time to interpret what it's telling you. Don't just look at the numbers in isolation, put them in context of the rest of your chart. Are prices making new highs, but the relative volume is lagging? That could be a bearish divergence signaling trouble ahead. Or are prices dropping, but the relative volume is surging? That might mean it's time to buy before the price rebounds. Now that you've got a handle on what relative volume is saying, let's talk about how to use it in your trading strategies. One strategy I like to use is looking for breakouts from key levels. If a stock has been bouncing between two prices, let's say 100 and 105, and then suddenly breaks above 105, that's when I pay attention. If the relative volume spikes at the same time, it confirms that this isn't just a random move, it's something bigger. Another strategy is following trends. When you're in an uptrend, you want to see the relative volume staying above 1 because that means buyers are piling in and driving the price up. If the relative volume drops below 1 while the trend is still going up, it might be a sign that the momentum is slowing down. Maybe it's time to take some profits off the table. And then there's the reversal strategy. One of my favorite patterns is seeing a stock that's been trending downward, but the relative volume starts to rise. That could mean that the selling pressure is weakening and a bottom is forming. It's like when you're walking down a hill and suddenly you start going uphill. Nature abhors a vacuum, so the market might too. Now, how do you know if these strategies are actually going to work for you? That's where backtesting comes in. Trader Pro has some pretty powerful tools for this. You can input your trading rules like buy when relative volume is above 1 and the price breaks out, or sell when relative volume drops below 1 during a downtrend, and then test them on historical data to see how they would have performed in the past. This process helps you figure out which strategies are worth pursuing and which ones don't work as well. Plus, it's a great way to refine your approach over time. For example, I found that adjusting the look-back period from 20 days to 10 days gave my backtesting results a better win rate when trading short-term futures contracts. It's all about finding what works best for you and your trading style. So, let me recap what we've covered today. We talked about how relative volume can help you spot trends, confirm breakouts, and even predict reversals by comparing it to historical averages. We also went over how to use Trader Pro's tools to add the relative volume indicator to your charts and customize it to fit your needs. But here's the thing, none of this is going to make you a perfect trader overnight. You need to keep learning, keep practicing, and keep honing your skills. The market is always changing, and so are the tools we use to analyze it. So, my advice to you is to take what you've learned here and put it into action. Try out these strategies, see how they work for you, and don't be afraid to tweak them along the way. The world of trading is full of opportunities, but it's also filled with risks. By mastering tools like the relative volume indicator and using platforms like Trader Pro, you can give yourself a big edge. So go out there and make it happen. You've got this.